I'm Larry Formato, and we are here with Eric Miller. Eric is in Arizona in that wonderful weather in the what is it, 80 degrees out there?
80, yeah, 88, 89, somewhere in that range.
When does it
No
actually?
humidity.
When does it get down to whatever it is, 70 or something?
We're getting close to it. It'll be probably mid-November, and then through January, and then after that starts to warm up. It's too cold to go in the pool right now.
Yeah.
Yeah,
Too cold to go in the pool.
A few degrees, yeah.
Few degrees.
So,
that's why I like here because we could still go to the beach in December.
All right. Well, this is Willie Fats. In case anyone wants to know, he's my little sidekick over here. And Willie, Eric is probably one of the smartest guys in the stock business today. And when it comes to clearing paper, nobody does it better than Eric. So, Eric, you want to just give us a little bit of background on yourself?
I mean, well, I started out back in 1988 when I was my 21st birthday. Started as a stockbroker with a small firm called Stewart James. And from there, went on to Muni Bonds in New Orleans and started to realize there was more money to be made on the other side of the table instead of making outbound calls. And I started taking companies public and promoting them. Back in the old days, when we used to promote straight to the brokers. And
Cool.
at that point, there was no real internet. It existed, but there was not the same type of reach. And we were still doing faxes and pieces like that. And then I got back into the brokerage side on the clearing end and learned as much as I could. And it's the intricacies of the 144 and 481 rulings that are out there to be able to take paper from restricted to free trading. And it's a specialized knowledge, but it comes in handy.
So, you talk about 144 and all these other numbers that, average people don't even know what the hell you're talking about, right? So,
Yeah,
what the hell are you
Well,
talking about?
well, basically, the shares are restricted for generally if you've got control individuals who are the founders of the company. They end up owning 40, 50, 60% of the company. And so if you have over 10% of the stock held in a company, you can't just unload it into the marketplace. So you have to have it in an orderly fashion. Other industry, and other times you'll have private placements and such, or note conversions, and those shares will be converted, but they'll still be restricted under most likely 144 unless there was a shell issue, which we can go into that in a minute. But in most cases, it's basically saying that if it's a fully reporting company, and that's SEC reporting, not just Pink Current, it's a 6-month hold, and then it's 1 year hold for anything else. You can tack back to previous owners. So if I buy it from you today, it doesn't mean the clock starts ticking there. The time starts ticking from the time the security was created.
That's
And
pretty.
then 4A1 is when you have a shell issue, and it basically just doubles the time period to 2 years. Used to be you could get away with anywhere from 16 months, right in that range. You'd have to hold 24 under what's called the stocks. The shares have settled, which means you held them for a substantial period of time, and it doesn't look like you have them for resale or for reissuance that would help the issuer. 4A1 is a real bear. In fact, I just cleared a piece this past week, and it was on October 26th was the date on it, and there was no way around it. Well, the transfer agent would allow you to have the shares free trading, which the cert was nice and clean, and you run that quite a bit where people go and say, well, there's no restriction on the cert. Brokerage firms don't look at it that way. So it's always, it's the nuances that make it, I wouldn't say fun, but
And
tedious. In a lot of cases, it's literally like unknitting a sweater and putting it back into balls of yarn. There's a lot of levels to go through.
so, I guess ideally now for guys that are looking to buy paper, um, I guess the thing is the 3810, right?
Well, 3A10 is for bankruptcy setups. And with that, they had been cracking down on that because it would be an agreed to situation. So the company would go into bankruptcy, you would have the notes in place, and then at settlement, it was agreed to. It's sort of like the situations where you have a note with a company, you pay $200,000 or $300,000, and they agreed not to make payments, and you agree to default on them. You give them one warning, you give them a 60-day warning, and then by default, the shares become available again to trade. So a lot of those things have been cracked down on in the past 2 or 3 years. So really, what you're looking for is more of a pure play of hold periods being met very clearly by either purchase date, and the contract can be written on a deal, on a stock purchase on, say, the first of the month, but you don't pay it till the 15th. The security is only created when the check clears, the wire goes through. So it's that attention to detail. A few years ago, you could get away with just showing the front of a check, and which means absolutely nothing because you could write it today. And then, so nowadays, they'll not only want to show that the money came out of your account, but they'll also, in many cases, want to see that the money went into the account of the receiving party. So a lot of times we'll require that closed through an attorney.
Okay, cool. So, what we're going to be doing here in the near future is we are going to be having a segment called Pitching Pennies that you are going to be working for us, and
Yeah.
we're going to be talking.
We've got a couple companies lined up, and a couple in the marijuana industry. We've got one that's in the audio mastering industry. It's got some cool names in it, and these are companies that I would say undervalued and overlooked would be a catchphrase, but quite frankly, the best stories in the world without having an audience means nothing.
Right.
And it really is a matter of just having people taking a look at them and see that there are actually quality companies that are out there that do trade in lower price ranges, and really take it from that point.
So that's going to be pretty cool because the people that click on to our Pitching Pennies segment are going to have an opportunity to hear about these companies and take a look at them from a kind of like an inside view.
Well, yeah, not only an inside view, but just really get a feel for it. There's many times these low price securities are a closet with a fax machine in them, and the inventory that is in maybe literally $5,000 worth of inventory.
Wow.
And that's what the regulators don't want to see. And actually, quite frankly, I don't think anybody wants to see that.
Right.
So when you do have these companies that are just they went public through a much more tougher road to hoe, but at the same time, maybe they didn't have the revenues to go forth and have an investment banking firm that could pick them up. It's and then also bringing into effect too is under the Reg A Plus. I think we're going to do some talks on that as well. I've got a guy with Boosted Securities. I think would be a really good conversation about how to raise money where it's almost a crowdfunding setup, and then they take it onto the NASDAQ. And they were the very first company to underwriter to ever have a Reg A Plus go to NASDAQ. So there's some good areas here.
That's pretty good. So our viewers are going to have an opportunity not only to see the show and get some really good advice and learn something for once, but they'll also be able to send in some questions that we can address in the following segments.
Absolutely. And then also to be able to look at, I think have them start taking a look at when they're looking at a stock trade at price ranges. It doesn't really work the same way as when you're looking at the stochastics and the rest of it on a big board stock. You really need to look at the fact that you can't even trace the short interest because the way the market makers work, they're going into a short position, and if they go over 2 days into a short position when they're moving a piece, it looks like the short volume is preposterously hard.
Right.
And in many cases would represent 80% of the volume. That doesn't give you any idea. So while there was a time that people were like, oh man, we're looking at the short interest on it, it means absolutely nothing in these deals. So again, there's a lot more to it. And if you take a look at some of the websites that are out there that have chat boards and the rest of it, it's amazing how many people have opinions and don't know basically anything about the companies. And on the companies that we invest in, we know them forward and backwards and ugly and all. And it's to be able to, if you take a look at it, people have to take a huge leap of faith to be able to buy these in the open market and not have those type of relationships. So yeah.
So also adding to all of that you just said, I guess. So if the market is going down, that doesn't necessarily mean that one of these little companies is going to go down with the market, or if the market's going up, that doesn't necessarily mean that one of these little companies are going up as well, right? It doesn't. They don't reflect. Their prices don't reflect what's going on in the real world as far as the
They literally almost reflect almost themselves, and that's it.
Right.
There's nobody in their stock account goes, oh geez, I got to cover my margin by selling a 4-cent stock. It just doesn't happen. So with these deals, they're a lot more emotional plays, I think, than they are even in any industry. They don't correlate with anything. And then then you've got the industry levels where mining, things like that. That's one of my pet peeves is mining. The definition of a miner is a liar standing next to a hole. And anything that's underground, I don't believe in. Mine is it's like for me, it's like looking into a magic 8 ball and trying to get a right answer out of life. There's some industries in particular like that. That's why I like ones that can show revenues today, as opposed to I've got $6 billion worth of reserves, but it only costs $7 billion to get it out of the ground.
Yeah, exactly. Yeah.
So yeah,
But it looks good on your balance sheet.
it does.
It does. It looks really good on your balance sheet.
Yeah, yeah, and that's like me saying my scale looks good when I look at it.
Yeah.
It doesn't. Hopefully, it doesn't reflect reality. But yeah.
So, in your business that you're in today, the type of business that you're doing, you run across a lot of strange, weird kind of people, guys like myself, as an example. And when I started in this business, it was an entirely different business. And, we had a lot of wahoos running around in the business as well. And we kind of, organized crime was heavy into the penny stock business back then. And I know you have had some brushes, I guess, along the way, and know some people along the way as well. And it's kind of interesting to see, the evolution of all of that.
Yeah, I mean, in my experience today is it doesn't really exist anymore like that. There were days when they would come in and literally beat the heck out of a trader who was trading against their stock, and they get the phone call to stop, and they didn't listen, and then someone come in and break a chair with somebody's head. There was a broker dealer in Denver, and they were doing the 15C211, which is the sponsorship, for lack of a better word,
Right.
for a stock that was a foreign traded stock that actually did extremely good revenues, but they did animal testing and everybody hated them. So PETA came in and said, we will mess with anybody who does the 15C211. So they go for it, and this firm still exists that's in Denver, and they did the 15C211 and held it. And so Easter comes, and this family that was one of the main families of this of the broker dealer has their Easter dinner at their house, and they're having it by the outside. And the guys from PETA come into the back of the house, pour paint all over the guys in bedroom, tear the place to shreds. Nobody even realizes it. I don't know if they were drinking at Easter or what, but when they came back in, the house was destroyed, and they basically dropped the 15C211 in the morning because they made it real clear it was not going to stop. And so a guy, he's passed away now, but he was in Oklahoma. He picked up the 15C211 because they basically paid him $50,000 every quarter just to hold it for him because they wouldn't be able to trade in the U.S. He lived in Oklahoma in the middle of nowhere, and they pretty much left him alone because there was no real way to get at him on it. But that's the kind of craziness. Somebody said, Elon Musk, you're not going to be trading because the oil companies hate you. Everyone just go, that's just insanity. But that's the type of things that can happen in the smaller world.
Well, we back in the early '80s and late '70s, we didn't really run into situations where we actually would send people to homes of traders or anything, but we certainly would let the traders know that if they didn't do or trade out of our stock the way we wanted them to, they were going to have a serious problem. And we had the muscle back then to make that happen. So when we made those calls, they knew it was for real. A lot of guys just blew smoke, but we were the real guys back then. And like I said, it was a totally different world. And talking about that, just side note, so like Gene Gotti got out of jail like a couple of weeks ago, and Gene got popped with Angelo Ruggiero, heroin, and I think that's what set up the whole Paul Castellano hit, because when Gene Gotti got popped, Paul Castellano wanted to wipe out everybody. John Gotti, Gene Gotti, Pete, he wanted to get them all. And Neil Delacroce was trying to hold everything back. And Gotti wanted to whack Castellano immediately. Neil Delacroce wouldn't let him do it, but when Neil died, Gotti stepped in, of course, and everybody knows the story. But I thought it was kind of interesting. I think he did like 17 years with that, maybe more. No, 30.
Wow.
I think maybe he got 30 years. Something.
All
Something
for
crazy.
heroin?
So he's out now. So it's going to be interesting to see, what his plans are in the world. I don't think they're ever going to be able to pull it back the way it was at one time. But
What families pretty much controlled the stock side of things back in the 80s, 90s?
well, we roped everybody in. I mean, everybody was in the late 80s for sure, middle 80s. Genovese was strong. Gambinos were strong into the penny stock market. Bonanno was even into the market. So, I mean, Joe Bonanno he made a lot of money in the market. I think he was like one of the first bosses to even think about, getting into the penny stock game.
Was it a method for laundering money as well?
Oh, absolutely. Of course.
Mhm.
Yeah, that was the big thing back then. So, when I went to Congress, the whole reason that I went to Congress, one of the reasons was because of the infiltration of organized crime into the penny stock market. And so they want to know exactly what took place, how it took place, what these guys did, and how they did it. And basically, what I told Congress was, no matter which brokerage firm it was, what trader it was, organized crime pretty much has their hand on the shoulder of anyone that's doing any kind of business back then. So it was a rough and tumble world, that we had back then. But we made a lot of money. We were doing blind pools, which were crazy stuff, man. So.
Well, and you take a look at some of the cases today. The one, Phil Keever just was the last one on this CYNK. It's listed as one of the biggest ones in history, and involved a bunch of guys out of Belize. And I'll be quite frank with you. And all those guys, again, it was the largest in history. Tons of money sloshed around. I was not afraid of any of these people on a bet.
Right.
And even their losses, what are they going to do? It's a bunch of guys all in cahoots to be criminals. They're not going to really sue you too hardly. So while there was an undertow with maybe one guy in particular that thought he was a tough guy, the rest of them, there was nobody to be afraid of. Everybody wanted to make money. That's what they cared about. So like, okay, we're all going to work together to roll down this hill. And then they tear each other up down the road. But the trust level among these people who didn't know each other was astonishing. I think that's what unraveled it. And I think that's where, if you did have a crew together that actually was responsible to each other as opposed to ready to flip at any given second, and also ready to just take each other to cleaners at any given second, there was a reliance for several years on everybody coming to an agreement that I may own all the shares in the entire company, but all these strong owners are out there, and nobody's going to talk about it somehow. It made no sense. And they would make documents up that literally were identical for dozens of people, but signed off and notarized and signed off on the same day within 3 hours of each other around the world. Well, I can tell you something. I can't get 3 people in this town to sign off on something the same day or week. So the implausibility of the paperwork was astounding.
Right.
They didn't even go to try to make things appear to be plausible.
Right.
And still the paper goes right through the firms and goes straight out onto the street. And their claims are the brokerage firms just make the claim that it's the attestations. I got to rely on the attestation. Well, Larry said this, so I got to rely on it. And there is no way to third party it. But the reality is I see 4 pieces of paper that are identical that came from 4 different countries. I'm going to guess probably that wasn't the case. But you're not supposed to infer these things. But the SEC and FINRA and the Department of Justice really do see through this type of malarkey,
Yeah.
for lack of a better
Yeah.
word.
That's crazy as hell. Go ahead.
Did he ever have any run-ins? I mean, like, I know he did this in the 80s, but did he have any scares, or did any of you guys try to beat him up? I mean,
Who, Eric?
Yeah, Eric.
Did I try to?
No, I mean, just in general, did somebody actually try to break down his door? Because I know, Eric, you probably had to tell someone, look, I can't make this money. You didn't have no run-ins with anybody?
Here's the funny thing. I worked with a firm that was called Stewart James. We were 1,600 brokers. Everything was encapsulated in one unit, trading, and the only people that traded these stocks were these 1,600 brokers. So we had deals that would move from a nickel to a dime to 18 cents, then back down to a dime. But it was all in a microcosm. Think of an ant farm. Well, that's not a real market. And why it was allowed
Right.
to go on for as long as it did, well, it was craziness. You'd call these people up, you'd get them in on the IPOs, and then you'd shovel them into whatever. You read the tickets, you read the inventory sheet from the right to the left. The commission was on the right and the ticker's on the left. And you'd flip your entire book out. You spend 4 months putting everybody into a position, and then you pick one day when it's up. Everybody's in kind of agreement with trading. You mark it from the inside. You tell them, "Oh, I've got no commission on top. I'm doing this as a favor to you. No commission on top." But they don't realize I got 4 cents on a 15-cent stock that's going into commission. And then you flip them into so you take them out, and you put them into something new. And if it happened to be up, you hit them for another big whack. And the worst thing you could ever do as a client is to really do well on the first trade, because they'll give you $5,000, $10,000 on the first trade. Then you turn it. Let's say you give them a 300% return. Then they give you some real money, and that's when they really get taken with fingers. That's the worst thing that could happen to a client. The best thing that happened to a broker at those horrible days. But yeah, it was different. And I was 21. I had no idea that this microcosm didn't represent all of it. And so I stayed with that for a year and a half. Then I went into muni bonds, and that was, I'll never forget, you'd write tickets that were $50,000 to start with, and I couldn't even comprehend it. And these people called, well, okay, we'll take this. So I was lucky. The firm I was with was Scharf and Jones in New Orleans. And when I got there, an old man had died who was a broker. I had a book this big.
Right.
Time to reposition in an ever-changing marketplace. I blew him out of all of his bonds. Trading, who was on the other side of the wall, they come in with, "What are you doing?" I'm like, "Well, I'm getting them new bonds." And they're like, "Wait a minute, we have to suck this stuff in." And because they were Louisiana bonds, it's not like, in reality, I had actually gone into the same type of situation. Instead of being in stocks, now I was in muni bonds.
Yeah.
Because there was this microcosm, again, that's the state of Louisiana, and they're buying the same stuff, and they just want the tax benefit. And so
Yep.
my idea was like, hell, I got a huge book here. It's time to
Turn it.
liquidate it.
Churn and burn, buddy. Churn and
We're
burn.
not fund managers here, boy.
Just turn the shit out of that thing, man.
I think the point of it is that it's all type of the same thing. Everything's a microcosm. That's why when you see stocks with the big board stocks or they're foreign anything, it's controlled by its own magnetism and gravity. That's the way I think it really is. And then once you start to realize that, when you see market swings and the rest of it, it's really irrelevant to the whole scheme of things.
So without giving away any great advice or getting front loaded on your pitch and penny segment that we're going to be doing, if you were to tell someone today who wants to get into the penny stock market, what advice would you give them?
Absolutely.
Here's the bottom line: buy what you know. If you know about electronics and if you know about real estate, the company that I work with, we're the largest buyer of non-traded REITs literally on the planet. We know real estate forward and backwards. We like to think so, and we buy it at ridiculously good prices because we've got the cash to anytime somebody needs to liquidate. We know that side. We know technology because I bring in guys. There's funds that we invest in, like social leverage, which is amazing. We were some of the original investors in Robinhood, WAG, some of these companies that 8 to 10 bangers on returns. But at the same time, we lose a lot of money on deals, and but you've got to put your thumb in a lot of pies to find out what you like. And sometimes a really good story is just that. I put money last week into a deal as a rocket technology company, and 2 years ago I would not have thought of doing that. And the reason being was because it's before Elon Musk started deciding he's going to launch rockets, but they actually own patents on a way of as solid propellant goes, it basically just pours out of the bottom. But they have this patent to where it regulates the pressure. So as the rocket goes higher up in space, the amount of propellant gets burned off disproportionately as the elevation goes up. I don't know the physics behind it, but I saw the patent. They've been around for a while. They still got a good 15 years, and it's a private deal. My hope is that it gets bought out. It's never going to go public. It should never go public. It doesn't make revenues. They're doing a launch. I think whatever the weekend of the 17th is, I'm going to watch it go. And it probably and there's always a good likelihood that the technology isn't picked up by somebody. But if it is, then I got a 3 or 4 banger on it. And if not, I didn't throw that much money into the deal.
So let me just bring it back into the realm of the small investor,
Like me.
Mm-hmm.
like Willie Fats.
Like me.
All right. So for a guy like Willie Fats, who hears about the penny stock market but doesn't know anything about it, but he wants to invest in the penny stocks,
Where do I go?
what does he do? How does he do it? Can you give him some advice, or would you
Read
tell
up
him
on it.
don't do it at all, or?
Well, there's definitely some people you should say don't do it at all. There's many people like that. They should just stay at home and put their money in a shoebox. But if you're interested in, the old saying, if I can show you how to turn one into two, there are penny stocks that do move up, and it's easier for a stock to move from a nickel to a quarter than it is to go from $10 to $100. It's the economies of scale on these types of stocks, and they also can go to zero. You have to. The most important thing: do not throw more money in than you can afford to lose. End of story on that one.
Okay.
If you put in your mortgage money for the next 2 years, then you should be ready to live under a bridge, because it could very well happen. But if you're putting away 10 grand, 15 grand, 50 grand, whatever it is that you feel confident you can lose, and keep an eye on it, many people don't bother keeping an eye on it, or they'll also tweak out after. They'll look at, they may have a limit at 15% on their big board stocks. A stock the bid and offer can be adjusted by 20%. You could stop yourself out of a trade within minutes of getting into it on a penny stock just based on the intraday trading. And it doesn't really reflect the valuation of the stock. So you have to have a different mindset as to the trading the stock, holding them for different time periods. And the other thing too is to get out. Anytime you can walk away with your fingers on your hands, you're doing good. So if you've got gains, take them. And if the stock pulls back, which in many cases they do, go back into it. And if there's something in it, the news on these deals is what drives them in many cases. And one of the worst things that I've seen happen is a company starts to go profitable. Everybody, this company's got to make millions of dollars as they go through it. The stock moves up, up, up. Then the stock pulls a nickel a share in profits. Oh, well, we're going to trade on a 16 times that. And that's where the stock stops.
Yeah.
And so you have to look at these in different ways. A really interesting example of that, what company just went profitable for the first time? Tesla. Holy shit, it's a real company. It's got profits. Oh my God, now we've got to value it based off of those profits and not the other things going on. Before they were making profits, it could be the next GM times 2. But now it's showing profits, now it gets kind of boring. So all these type of deals, if a company's not making revenues, I don't like to see pre-revenue deals. I like to see revenues, but I don't necessarily see the profits on it, because they're not rolling money back in to keep the edge going or whatever the next step is. And one of the things to keep an eye on is on marijuana stocks. It's a really harsh roller coaster. If you look at post-prohibition alcohol companies, everybody thought, as soon as prohibition ends, the stocks are going to go up.
Right.
They actually went down and took over a year and a half before they even came back, which is almost incomprehensible, because you have companies like Anheuser-Busch that were doing near beers, that were 0% beers. They were doing bottled water. They were doing all kinds of stuff just to stay alive. Then, as soon as they came back, I was thinking it was going to happen, and the unrealized anticipation, and that's where a lot of these marijuana stocks get really messed up is the reality starts to fall in that this is a really hard business, and that's an area that I know very well. I've been involved in medical marijuana since 2012, investing in and being involved in. I was president of 2 publicly traded ones, and it's a really crazy business. And most of the people that are in there do not know anything about it. It's like you and me decided to go into the shoe business because Nike makes a lot of money. I think we're going to get wiped out, but we got cool shoes. It just doesn't work.
All right, so that's pretty good advice, and we are just about running out of time here on our segments.
I'm listening to a podcast, and they have a thing. It's called The Pitch,
Yeah,
and it's like Shark Tank, but these guys are like real fund managers.
yeah.
And this guy gets on there. He's talking about this program that gets your bank fees back, and I'm like, this is pretty amazing. So I listened to the whole thing, and the guy's made some other really big companies. So I go online, go into my Wells Fargo, link up to the program. The next morning, I had $108 in fees returned back. They were all my wire transfer fees were $15. It got me $375 on most of them back and $750 on the others. I got $108 back. So I call over to the guy. I said, American Miller, I'm with Ira Gaines' office. We're interested. Boom! I got a call with him for next week, and we got to put some money in this deal. I was astonished. I watched it actually happen in front of me.
Wow. Well, guess what? You're telling the whole world about it right now.
Oh, there we go.
Wow.
So that's a pretty cool thing. So
We need that program.
we need that. Yeah. Send us that program.
Yeah.
But there's some of these, and you don't know about it. Randomly, I heard about it on a podcast. That's the other thing with small companies like this. You don't know where you're going to hear about them. They don't get the press coverage. They don't get they don't have a PR department.
Right. Oh,
What's up?
you're thinking.
Something bunged on my side. I don't know what that was.
So being heavy into real estate as well as stocks, the prime rate moving up, you think that housing is going to fall with the prime rate going up?
I've got a kind of a contrarian position on that. Here's the reality. When we were buying homes 15, 20 years ago, we paid 8, 9, 10% interest rates,
Right.
and we still bought houses. You know what? If you have to not get a mortgage because it went up from 4 to 4.5%, you're probably buying way too much of a house, if that's going to be the effect. Everybody dodged some huge bullets when the interest rates just dropped and dropped and dropped when they were holding the arms. They were holding 15 and 30-year arms.
Yeah.
And nothing happened, but the interest rates dropped. This whole world would have been an upside-down situation if interest rates would have gone which is the way they really should have, which is up.
Right.
So what you're looking at is if you can't buy a house, if you calculate out your house payment at 8%, if you can make that, then buy it. And if you can't, don't buy the constant idea of always shifting to the next major level. And that's why when you see in markets like in the Denver market, we saw that this major slowdown was in the about $500,000 to $750,000 range was just decimated. The people that could really afford houses that were $1 million plus easily bought them, and that lower end churned itself through quite effectively. The houses in that range, the one step up, people could not afford that mortgage going into the higher level. So I think people have been spoiled for a long time. And the reality is I remember my mother doing commercial real estate deals at 12 to 18%. And if the numbers work, then the deal makes sense. And guess what? You just have to have a tighter deal. And if it's commercial, it's because it's business based. And if it's a home, it's because it's how much your income is based.
Right.
That's right.
Either A, work harder, or B, get a house that you can afford.
Well, back in the day, you had to have 20% down in order to buy a house.
Oh, yeah.
With the zero down crap,
Which is back.
which is back.
Yeah, horrifying.
It is.
And not to mention,
Yeah.
you got the first time buyers program. They don't need no money down when they do the first time buyers program.
Yeah, and it's astonishing. You think we would have learned in 2008, but there's so much more to that though. Lehman was an absolute disaster,
Right.
and they considered themselves to be the too big to fail. Honestly, nobody's too big to fail. And they controlled the refi market and what was put into those derivatives. Good Lord, I mean, you could shovel a lot of garbage when you're moving $1 billion. You can move $100 million worth of stuff that's never going to pay. and you look at the cost associated with mortgages that don't perform, the 10% of the cost of mortgage servicing, and I'm probably off by a few percent, is 10% is the cost of of servicing mortgages is the performing ones. The rest of the cost is non-performing ones. The second they stop paying, the costs go through the roofs for these servicing companies and for mortgage companies. You don't want to have these homes in these crazy as soon as they stop paying. And
Right.
now where the signatures have to be verified, the old days, the robo-stamping and the rest of it, you could effectively put 10,000 people into foreclosure in a month.
Wow.
Now, these firms need to actually really look at the quality of the borrowers, and that's why when I see these things with the no down payment and the rest of it, it's a recipe for disaster. And literally, it's putting your tongue on the hot coffee 5 seconds after you did it.
Well, don't put your tongue in the hot coffee, man.
Yeah.
I'll try not to.
Let's not do that. So yeah, so I think what we'll do is, and it'll be kind of fun as we progress here with the elections coming up, and these interest rates. I'm really curious to see how it's all going to play out down the road. And now we have our expert, Mr. Eric Miller, with us, and he's going to be able to take us down that journey as we go forward. There, Willie, what do you think of that?
I do. I agree. But I'm really, he makes it sound so complex, the stock market. It's almost like we're English and he's talking Spanish. It's like, but it makes it interesting. You just stay glued to listening to what he's got to say, and almost like, dang, I want to play the stock market, So I'm really interested to see moving forward what else he's got to say, because you can learn a lot from this guy.
Willie says he can learn a lot from you. And,
All right, Willie. Well, we'll see what we can teach each other. I'm sure you know something I might not.
and I think we can all learn a lot from you. And I'm really looking forward to Pitching Pennies with Eric Miller. So Eric, thanks for sharing all your knowledge with us today. It was a wealth of information. And Willie, did you walk away, feeling a little richer today?
A lot richer. I'm ready to play some stock.
There you go.
Bring it on.
You can't win if you don't play, right?
That's right. That's right.
All right, Eric, thanks an awful lot, buddy.
All right, guys.
And we'll see you on our next segment of Pitching Pennies.
There we go.
All right, thank you.